So last week I predicted that the Fed was going to lower the Fed funds rate the next meeting at the end of July, even though there's an 80% chance that they're going to just leave the Fed's funds rate alone. It looks like I'm not the only one that agrees with my assessment.
Why don't we talk a little bit about where the markets stand overall right now? Because we're looking at both the S&P 500, the NASDAQ, and the NASDAQ 100 all closing at new highs again on Friday. It's the best quarter for technology since the second quarter of 2020. What's happening, and how do you see this playing out?
Well, this is still the most hated V-shaped rally. And it, of course, has a lot to do with when stocks fell in a waterfall decline into April. Nobody likes to be sitting on stocks, so a lot of folks liquidated at the lows. But we know that whenever the VIX is above 60 and falls below 30, you've made a decisive low. And now visibility is better. You know, tariffs aren't as bad as we expected, and the inflation impact actually has been very muted. And actually, outside of tariffs, underlying inflation is actually much lower than people expected. And I think the Fed is, even if they're holding now, the bond market doesn't believe it. If you look at the 2-year, they think the Fed's 2 cuts behind.
Yeah, so I do think that the Fed is a couple rate cuts behind. I do think that they should and need to make a rate cut now, or in the next meeting in July. And I'm banking that they're going to do it. But he's saying he's not. So we'll stay tuned to find out.